Inflation at 9.2%. It's a very giant leap in terms of CPI figures. Why didn't the authorities see this coming?
Yeah, I wouldn't say they didn't. They probably did, but they were more concerned about stimulating economic growth rather than manage inflation at that point. Because how are you going to explain to people the fact that you're raising interest rates at a time when the government they think they need the liquidity to manage the economy?
Obviously, rising fuel prices have been the biggest impact on the CPI basket, and we've recently seen interest rates hiked by 25 basis points. But there's a view that the CBK should be acting more decisively. We should see bigger and deeper cuts.
Yeah, well, we thought that the central bank, prior to raising the CBR by 25 basis points, they had just slashed it, and we thought at the time they were slashing it, we thought the prudent thing was to raise them then. So they didn't. They slashed, and everybody went mad. I think that's perhaps at that point they fell behind the curve. Everybody could see commodity prices in the international markets were rising. Even before the Middle East strife in the Middle East. So I always thought at that point that the government should take a position and protect the common man from this oncoming inflation, because Kenya is a net importing country, and if you look at the composition of our imports, they're largely essentials. So at that point, we thought the central bank should have been more decisive in raising, in supporting the shilling, and even as the Western central banks were inflating away.
Okay, Johnson. In fact, what I meant by that was deeper and more meaningful hikes. But on this issue, we've seen the CBK coming back into the market and using a reverse repo. But what that's done is created excess liquidity in the market, as opposed to stimulating a credit flow on the one hand, but also reining in that kind of issue in the market. What do you make of the kinds of efforts that have been taken to defend the shilling?
Well, I think the central bank is in a quandary, because at one point they want to maintain low borrowing rates for the government. The government still has a huge bill. It still has quite a bit in terms of spending to do, and this will not be footed by taxation alone, because taxation only makes about 2/3 of what they expect to spend. So I mean, they need to keep the interest rates low, but at the same time they're looking to protect the shilling. So they come up with all these creative ways of trying to support the shilling, which for me I think is very short term. At this point, I would have thought the government should have gone into austerity, try to liberalize just to stimulate the private sector, and at the same so that and then cut taxation, and which will lead to lower interest rates, probably in the long run, not in the short run. But right now, inflation is a big issue, and I think that's what they should be acting on.
And very briefly, Johnson, your views on what the IMF has said about inflation targeting. Is it feasible for Kenya right now?
I think that's what makes sense. Having looked at the Bundesbank and its subsequent and its the ECB, I think it has worked better for them than the dual mandate of economic growth, because for me economic growth is better left to the private sector, and the central bank should be left to manage the currency.